Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Welcome everybody to another Zoom interview for SED members. Today we have Brent Ashton, CEO of Covalon Technologies. Covalon trades on the venture exchange under the symbol COV. There's roughly 27.4 million shares outstanding. Closed today, which is September 9th, 2025. Closed today at $2.28, or roughly a $62.5 million market cap. So Brent, thanks for joining us today. We have sort of heard the presentation before, but now we're getting an opportunity to get an update. So appreciate the time you're spending with us. But before we get into sort of any updates, maybe refresh everybody's memory and tell us what Covalon's all about.
Yeah, so I've got a couple of slides here, Paul. So it's great to be here with the Small Cap Discoveries group. Thanks, Paul. Thanks, Trevor. Last time I was here was about 6 months ago. I think it was in March. And so I can give you a kind of high-level view of the company and talk through and show some of our products and whatnot, and then we can go from there. And I've got some updates on what's kind of taken place over the last 6 months as well, if that works.
You bet.
Perfect. Okay. Standard, disclosure slide. You can read it on our website as well. Oops. So this is really Covalon on a page, right? And what we're all about is working with our customers and hospitals and partners to really prevent preventable complications and deliver better outcomes. You can see some of the areas we focus on. If you're not familiar with Covalon, we're big around reducing pain and suffering, preventing infections and other complications. And you can see our 5 leading products here at the bottom, which include our flagship wound care dressing, Colactive Plus. So really aimed at a market that is really needed. These products that really help avoid wounds that won't heal, so stalled wounds that can lead to tragic amputations and even death. The 4 products on the right are more in our vascular access and surgical portfolio, where they help prevent contamination or secure IV dressings, really big around preventing bloodstream infections that affect hundreds of thousands of people around the world. Really high mortality rates, like 15-20% chance of dying if you get one of these, and they add a lot of cost and complications to the system. So we're really proud of the work we do, and the feedback we hear from our patients that have our products, the clinicians who serve them, is just outstanding. Probably makes sense to just give you a bit of an update on the last 6 months and really focused around these 4 areas. So on the commercial advancement side, we've been expanding our selling team in the US, and we've put a different focus on account acquisition. One of the things that we talked about after this call, but we've talked about externally after this call 6 months ago, was we've been trying to rise up the value chain in terms of US hospitals, going from individual hospitals here or there to also going after health systems that have 50 or 60 different hospitals. And we've had success with two or three, 2 definitely, a third one we're working on, where that's been really helpful. The market development side, I'm going to touch base in a couple minutes on some really exciting new developments there over the last 3 or 4 months. Absolutely critical in the med tech world that we play in, around clinical evidence that proves out the value of your products and unlocks stuck accounts and whatnot. The innovation and business development side, over the last year and a half or so, we've tripled the size of our innovation hopper. So the list of what we can do is massive. Of course, we've had to prioritize that. And I've really worked with our leadership team to look at things differently from an innovation lens, not just new products, but looking at new use cases for products. I'll touch on one of those that's come about the last few months in a bit. And then on the operational side, we're very fortunate. We brought a lot of our manufacturing in-house. That's driven some really strong margins over the last year or two versus where we were at several years ago. And we're looking to continue to optimize that front. I alluded to the market development side of things, and here we are really, really excited. We're literally days away from the publication of Covalon's first peer-reviewed clinical evidence study. And that was work that has taken place recently at the Children's Hospital at Montefiore. And so this was a study. They treat thousands of children every year, and bloodstream infections are a big deal for them and trying to reduce them. And so they actually implemented as part of their bundle. The last change they made was to implement this ValGuard product from Covalon that you can see on the right-hand side of the screen. And what that does is it helps keep contaminants out. You can think of, it's kind of nasty stuff. You can think of, children pooping their diapers and exploding vomiting or secretions. And our product, just that one change, led to a really significant reduction in these bloodstream infections. And so that's going to publish probably later this week, actually, in this journal of the Association for Vascular Access. And it's such a hot topic. It's now being presented directly at this Association for Vascular Access meeting in a couple weeks, and then a poster at the Magnet show that'll have about 10,000 nurses. So it's a great opportunity for the word to get out on the value of this great product that we think could be a $25–30 million product for us by the end of the decade. I won't go into super depth into all of these, but I talked about those new use cases of products, and this is a really exciting one on our CovaClear. So a new use with it as being used over top of an existing dressing. And in fact, we've got a bit of a second piece of evidence, a little more of a poster health economic story. And essentially, this major health system in the northeast of the U.S. found that for every dollar they spent on this solution, this alternative solution, it returned $2 in product savings. And so a really strong economic story that we're going to be sharing more about in the future with our customers. On the investor side, we recently, in the last, I think it was month or two, secured DTC eligibility. So that'll open up the doors to the U.S. market. Without that, it was really problematic for U.S. shareholders to trade electronically through, Fidelity or their platform of choice. And so this unlocks that capability, and we see good opportunities for increasing investors in the United States. And then on the last bit of kind of recent highlights, recent achievements, we've had a lot of success. We stabilized our international business last year. We'd had some rockiness in years past, and stabilized it last year. And this year has been about growth. And we've in India alone, we won a good tender worth a couple $2 million with their Ministry of Defense. We've had some strong success in Brazil and Panama, and in our home and native land here of Canada. Recently registered our ValGuard product and our CovaClear product, the two products I've talked about, and have some significant interest driving there. So super exciting on that front. Financially, it's been a really strong success when we look over the last couple of years. For sure, our Q2, our Q3 weren't as strong as we would have liked. That was really a function of last year having a lot of success in the wound care business side of things. And then, between inventory that was built up to support those new wins and working through that and a tough comp, our revenue was down a bit here in Q3. But when you look at the longer lens of a trailing 12 months, some strong growth there. On the profit side, we did have an inventory issue from 4 years ago, where some decisions were made. Thought we were going to win a tender, and it didn't materialize. And so we did the final cleanup on that one, and that drove, without that effect, our adjusted gross profit was in the 55–56% range. So in line with where it's been in the past. We've been pretty consistent around our operating expenses, being smart about that. And you can see that drop to the bottom line on the adjusted EBITDA. I think from the longer term lens, I'd call attention to that right-hand side and shows, looking at our fiscal quarters 1 through 3, Q3 having wrapped up at the end of the end of June, most recently, some really strong growth, right? And this is the area of the business that we're focused on. Our advanced wound care and vascular access and surgical consumables represents 99% of our revenue. So it's a good view to our current focus in the company. And over the last 3 years, it's grown at a compounded annual growth rate of almost 30%, which is about 5 times the underlying market growth rate of the spaces that we play in. And so we're seeing strong success there. And then, last slide here, just visibility for where we're at on our capital structure and the share performance. I guess just a couple things to highlight here, and then we can take some questions. We've seen we have a strong insider ownership. More than half of our shares are held by insiders. And then on the cash side, right, that's for a company of our size, having 18 million dollars Canadian in the bank is significant, and it gives us a lot of flexibility. We've deployed some of it, a little less than $1 million so far this year, on manufacturing investments that'll increase automation, reduce our labor costs and waste. But we're also actively looking at acquisitions and always have the option for other uses of cash as well. So, in summary, we're making a world of difference to our customers, our patients, and improving both clinical and economic outcomes, which is very important for our customers. We're investing and spending time on value creation activities that are absolutely setting us up for this strong, exciting, multi-year future growth journey that we're on. And so that's hopefully a good, whatever it's been here, call it 10 or 12 minute overview/update since we last talked. And I'd be happy to take any questions at this time.
Perfect. Thanks so much, Brent. Yeah, a reminder for everybody, if you've got a question, as I see a couple questions already being populated on the chat function, just jot them down and I'll make sure we ask that question. So you kind of answered a number of my questions, but let's go back to the cash. You're sitting on 18.1 million. You mentioned M&A. You mentioned some investment in automation. When we think about M&A, like what are you kind of looking for? Is it products you're looking for? Is it existing businesses? What can you tell us there?
Yeah, so it's really grounded in the fact that we know we need to be bigger and bigger faster. And so there's a lot of options on the M&A front. On the acquisition side, we see the opportunity. We have 2 very different businesses, the wound care business and the vascular access business, and different models different go-to-market models that connect to that. But definitely we see, and we've got a hopper of, I think it's about 35 or 40 different product lines as part of, other companies themselves, smaller companies. And so looking at different options on both vascular access and the wound care side of things. I think we want to stay true to who we are. I don't think you're going to see us do an acquisition in the cardiac cardiology space or neurostimulation, that type of thing. I love consumables. I love the consumable business model. Our business is very sticky, especially on the vascular access and surgical side. We win customers today, and we expect to have the vast majority of those still with us 5-10 years from now. So it's kind of like an annuity model that I think I've seen it in play in past companies I've worked with, and I'm seeing it with Covalon as well.
Brent, I might as well ask you, tariffs. What's happened to your business based on tariffs? How do you guys manage it going forward?
Yeah, I mean, certainly this has been, let's call it a roller coaster, right? If you'd asked me 2 years ago if I saw this coming, I think most business leaders would tell you probably we'd be lying if we said we had it perfectly predicted. This is a situation that actually has worked out amazingly well for Covalon. You might recall. Well, I'm trying to think back in the March call, but I think at that point there was still some uncertainty. But originally, we were staring down a 30% tariff from product manufactured in Canada, that was sold in the US, and that's a good chunk of our revenue. So we had some ways that we could mitigate it and whatnot, and we're always looking in case things revert. But we see, in the current model, 99% of our revenue that goes into the United States goes in tariff-free. It's the product that we make in Canada is covered under the USMCA. We actually just a month or two ago got a formal letter from the authority. We haven't had to pay tariffs, but it's good to have that in writing just in case the customs people challenge it, because it's an ever-changing world. And so we actually view the tariff situation as a competitive advantage. On both sides of the product, but probably more on the wound care side, we do see kind of that low end of the market coming out of China, goods made in China. And so with that tariff environment that right now I think is 30 or 40%, got as high as like 150, seems to change every now and then. But it's put a lot of pressure on those importers. And they've been raising their prices. And so, the pricing delta between our product and kind of the lower end has decreased. And we've seen a lot more interest. And it's not just the price. There's other aspects of kind of made in China that I think have been challenging. So being able to talk about made in North America has been a great story for us. So absolutely a competitive advantage. And, we're always agile enough if things change, but we see a pretty strong current situation.
What if anything has changed since the last time we spoke in terms of challenges? The business has to be pretty fluid and nimble to deal with things like tariffs and whatnot. But the drop in revenue, I guess the inventory loading prior to that. Going forward, where do you see your challenges and hurdles?
Yeah, we see a lot of opportunities for sure. Challenges, right? For a company of our size, we're always, it really comes down to how can we play bigger, right? When you look at who we compete against, they have resources well above us. And one of the things we're doing to address that, we are expanding our sales force, but we're not going to run back into losing money again and going crazy. But one of the things that's really exciting for us, we just hired two different types, but very focused around AI, artificial intelligence. And I'll tell you, like I am not an AI expert, but I recognize that it's probably up there with in my lifetime, the internet and mobile technology in terms of kind of life changing or business changing. And we've had these people for about a month. And I tell you, some of the things we've seen already in terms of like a force multiplier is absolutely incredible. And we've just scratched the surface on that. So, I'd say that's one of the bigger ones, right? How do we compete against companies that are 10, 100, 1,000 times our size, maybe 1,000 high end, but 100, 200 times our size. And I really think that's one of the ways, right? This very cost effectively, we can punch way above our weight, both on the marketing side, the selling side, demand generation, fulfillment. We think there's some businesses that's in our kind of future roadmap. There's some businesses that we think we can actually take from demand generation all the way to fulfillment without ever needing like a human to get involved in the process. And then, aside from that, there's some back end synergies on, R&D, regulatory, quality front that I think will be really exciting there. So as you can probably tell, I mean, we have just scratched the surface, but I am really excited about that opportunity.
Now, talking about exciting, you mentioned a bunch of new initiatives, everything from new products to new geographies, and whatnot. If there was one that you could really point us towards, what gets you the most excited as far as an opportunity for the business?
Yeah, it's probably recency bias, but even if not, being kind of coming up on 20 years in med tech, that market development angle is so critical. And that's around clinical evidence. And think of that as, for those that aren't super familiar with it, right? A good example is that ValGuard product. So customers buy that product to prevent bloodstream infections. These are horrible, conditions. You wouldn't want to get one. You've got a 15 or 20% chance of dying, and that's that's your worst case. Your best case is you're probably going to end up in the ICU with 14 days of antibiotics being infused into you. It's really tough. And so this Montefiore hospital that has been doing this work, proved out, in fact, in their PCCU, which is their pediatric critical care unit, they were able to go from a kind of typical bloodstream infection rate for a hospital down to 0, and they've sustained that for over a year and a half. And they just absolutely love the product. And now it's, and this is our fastest growing product. Like I said before, I think we think it can be a $30 million product here. I've seen that in other products like this from other companies historically. But we have had some resistance from customers that have said, like, hey, like, this is an added cost for me. I need to go to my team, it's called a value analysis committee. It's where decisions get made in hospitals. For me to go there and get this product adopted, I need to see some proof that you've actually lowered those infection rates by using this product. And this is peer reviewed. This was not Covalon doing the research. This was Montefiore, and it's going to publish, I think, in the next couple of days here in that journal. And I'm really excited because we're going to be out in front of customers. I'll be there in Orlando in 2 weeks' time at the Association for Vascular Access. This topic will be presented to customers. We'll be talking to customers about it. And we really think it's going to have a very, very significant impact on our business going forward.
Awesome. Okay, let's jump on some questions that have come in here. I'm going to start with Paolo's question here. It says, is the strategic review done? Why was it in place? And did the board see more value selling the company?
So the strategic review process, for those that aren't familiar, we issued a press release 3 or 4 months ago, I think 3 months ago or so, that we've engaged with Origin Merchant Partners, a notable Toronto investment bank type firm. And really, it was all about getting bigger quicker. And so what's on the table are acquisitions, mergers of equals, potential divestitures of one or both sides of the business, pursuing NASDAQ listings, that type of thing. And it really comes from the fact that we know our technology, and now we're starting to get the evidence to prove it out. We know our technology can be really impactful, and we just want to get to that fully penetrated state in a much quicker fashion, either through getting bigger and having more coverage in the United States and other countries around the world, more commercial presence, or by being a part of something better. If the end state was to divest one or both of the businesses together to someone larger with more scale. So process is not completed. It's one of those topics that when there is something to report, we will issue a press release and communicate broadly. But very excited with progress so far.
Awesome. Okay, next question comes in from Rahil. He says, are you able to share how many new hospitals were added in Q2 and Q3?
I can, but I don't want to do it off the top of, well, let's see if I can remember this correctly, and I'll pull it up. So I know year to date, we're at like the mid 60s. And that's through 3 quarters. And the reason I know that is we're one short of the total amount of hospitals we added all of last year. So through 3 quarters, we've essentially delivered what we did last year in 4 quarters. And that's a testament to our team and our products. And like I said, a good chunk of those has been, I talked about these health systems, or they're called integrated delivery networks, IDNs. And so landing a couple of those has added and accelerated that model there. So that's where we're at on the new hospital front in the US. We're really excited for the future too. I think we're kind of adjusting our selling model and looking at how do we, in conjunction with some of this AI technology, how do we get the top of the funnel even bigger? And because we know once we get those customers, the other side of it is, okay, like how many do you keep? And we're very fortunate through Q3 here. We've retained, of our top 50 customers from a year ago, we've retained all 50. We see really sticky, really strong retention there. in that vascular access side of things.
Awesome. Okay, second part of the question from Rahil says, are you able to provide color on average revenue per hospital, even if it's just a range?
Yeah, I would say I don't off the top of my head, and I don't want to quote the wrong numbers, but what I will say is it's a wide range, right? We have some hospitals that are doing $300,000, $400,000 a year, and so when we look at what that could be on a per bed, per hospital bed, which is one way to quantify it. Extrapolate it out, that'd be a $30 million, $40 million business for us. Obviously, we've got work to do to get everyone up to that level of penetration. We have some hospitals that are just starting out, and I guess, and so they could be, in the, a couple $1,000s their first year. What's interesting, what we see that I think is really encouraging from my standpoint is we get in with one product, one use, one department. So this could be, we get in with ValGuard for high-risk patients in the ICU. And what we see, one of our customers who happens to be a key opinion leader in the vascular access field, he said, Brent, we're in visiting with him. He's in Northern Jersey here as well. And he said, Brent, your products are like an infection. They just spread naturally throughout the hospital. And I'm like, I don't know if you want to be bragging about that word within a hospital, but I get where you're saying, right? So we start out with, ValGuard, ICU, high-risk patients, and clinicians kind of cross-pollinate and they see it. And our selling team works to expand. And pretty soon, okay, now it's used in hematology oncology. And it goes from just ValGuard to our IV clear. And we see, high risk to all kind of standard policy on all patients. And that's how we've been able to see accounts grow from a couple $1,000s to into the hundreds of thousands for sure.
Okay, next question comes from Paulo. He says, do you see growth in Q4 in 2026? And if possible, what's the targeted growth rate?
Yeah, I'm really excited about our growth prospects, right? We had some really high comps from last year. And so what we have committed to is we do see line of sight to sequential quarter-on-quarter growth here within the year, and a stronger second half than we saw first half. As far as 26 goes, we see good upside there. We're not going to provide a specific number, but we do between the wound care side and some exciting opportunities there, as well as the vascular access side, which is very linearly in a good way growing. I think it's been consistently growing at 25, 30, 35% year on year the last couple of years, and so very excited about the opportunities there.
And do you expect the bottom line to get back to levels, let's say the profit margin percentage, do you expect that to normalize over the latter half of the year?
I would say going forward, right, as we grow. And so we've got to get, we've got comps from last year that are certainly a challenge. There were some really good quarters there, largely on the wound care side that drove that with some big wins that built up some inventory on. But yeah, when you look at this past quarter, we had that inventory issue that we had to clean up from several years ago that dropped us down. But yeah, going forward, I think we see a good opportunity. The way our business works is as we grow, it's a great drop to the bottom line. Our margins are solid, and we do believe we can grow very effectively without having to add a lot of SG&A. And so we do see that curve going really well.
Gotcha. Okay, Rahil asks about revenue mix. What is the revenue mix? How much revenue is generated from, I'll go through all the products here, Colactive Plus, Vanguard, IV Clear, Cova Clear, and SurgiClear.
Yeah, so on the wound care side, which is the Colactive Plus product, that is the majority of our company's business. It's more than half. We have talked about that for competitive and kind of customer focused reasons. We don't split out the exact numbers, but outside of that, on the vascular and surgical side, ValGuard is our largest product on that side in the US, and IV Clear, a strong one in both the US and much stronger outside the US. But going forward, I think we see ValGuard as being a really strong product for us, both US growth and really just getting started outside the US. We've registered that now in a couple other countries, including Brazil and Canada and Saudi Arabia. So we're excited about that. So I hope that helps.
Well, it sort of leans into the next question here from Hill. It's in terms of geography, how are you seeing sales progressing international channels?
Yeah, so historically, this company was more than half their revenue. I think it was like 7 or 8 years ago. More than half the revenue was coming out of the international, vast majority of it out of the Middle East. And as I think most people know, that part of the world can be a little volatile. So right now, I think we're running around 80%-ish of our revenue out of the US, which we see as much more consistent, predictable, stable. Having said that, we needed to stabilize our international. It had dropped last year, so we stabilized it this year. I think we've grown about 30% year to date versus last year to date in international, and really added some new distributors. Added a new distributor in Israel. Looking at some other areas, expanding countries. Brazil's going well, and the Kingdom of Saudi Arabia has been a big revenue driver for us. We're seeing some exciting stuff there, going beyond just the main western side cities to the eastern cluster, I think we're doing international now the right way. I think there were some kind of fits and starts and stops that in the past several years ago weren't necessarily, in hindsight, the best strategies, but we're building in a smart way from here.
Brent, from an investor standpoint, watching the business, what do you think are the most important catalysts to watch out for? Maybe some metrics or something like that. I know obviously this Montefiore report sounds like a big one. What else should we really be paying attention for?
Yeah, I think, on the vascular access side, I think those 3 metrics that we share every quarter, and unfortunately I didn't share them here today, you can go to our website and see them, right? Retention of customers, right? If you've got a leaky bucket, it's really hard to grow. So retaining all your existing large customers, growing existing, right? So that's that, probably need to find a better term than infection, but that's the spread of the infection, so to speak, the spread of products, whether it's new products to existing hospitals or different departments for the same product. I think that's really impressive or really important. And then, of course, acquiring new customers. So I think those are things to watch for on that side. On the advanced wound care side, we don't report that out separately. It's a different business model with a smaller number of strategic partners. But I think just watching where that goes, we're seeing in that space. In fact, I was just at an industry meeting called the Symposium on Advanced Wound Care, and that space is in a little bit of change with a lot of reimbursement pressure on products that cost 10 or 50 times more than our product. And so that's, for us, because we don't play in that space of what's called skin substitutes, I think we're going to see some benefit to us and to other companies that play in these dressings that are really effective, but aren't, like $2,000 dressings. They're more like, $20 or $30 dressings, or smaller sizes, even more like $5 or $10. And so I think the cost pressure you're going to see in the US is going to be very beneficial to us.
I think this is the kind of product that it's okay to say that you want it to go viral, right? I think viral is
There
the
you
word
go.
we'll use.
Yeah.
Instead of infections. Yeah.
Viral, probably in a social media sense, yes. In a virus spread, no. We'll look, but no, yeah, absolutely. And I think that's where all this market development, like you're going to see. Well, I don't know if many people on the call are healthcare practitioners, but we've got a really strong program queued up on how we, share the word on some of these advancements on on the market development side, the clinical evidence side, and it really starts in a big way in a couple weeks at this big show that we're at.
Perfect. Did we miss anything? Do you think we covered everything? And if we did, what do you want to make sure everybody walks away with today?
Yeah, thanks so much, Paul. It's always great to get out and tell the story. I think people have picked up. I have a lot of energy. I've been in this industry for 15 or so years between wound care, vascular access, surgical infection prevention. I came to Covalon for a reason. I felt like I could make a bigger impact in a smaller company in a space I knew really well. I love where we're at, but I am so energized for our future opportunities. I describe to our team quite a bit like the toughest job I have is we have to say no to doing a lot of things, but that just means the things we do are really impactful ones, and the things that we are prioritizing are going to make a world of difference. We've tried to balance off the short and the long term, right? With some of the market development stuff a little more midterm, some of the things we're doing on the commercial side a little shorter term, and when we look at kind of that innovation and business development side, more towards the long-term view as well. So I'm very bullish on our company. Of course, I should be. I'm leading it, but I did come to the company for a reason, and I couldn't be happier with that decision to join Covalon. Feel like we've navigated some ups and downs for sure, and very excited for the future.
Fantastic. I mean, you operate in a challenging environment, let alone challenging sort of space. Lots of things going on right now. So certainly happy to have you on to explain all this for us. I appreciate that. We've been speaking with Brent Ashton, CEO of Covalon Technologies. Brent, it was great to catch up, and can't wait till the next time we get to do this again.
Hey, thanks so much, Paul. And I guess one close would be, while medtech can be complex and challenging at times, one of the most amazing parts about this business is it doesn't go away, right? Like a lot of other industries, you see a lot, and there's change for sure, but I remember I was at a conference. I think it actually might have been the Bloom Burton one in Canada, and I forget who, but it was from a firm, and showed like it's the only industry that for the last 60 years or 70 years or something like that has not decreased. The aging population, it's amazing, and I just love this space. We do a world of good, and I think we've got a good business model to create good shareholder value as well.
I agree. Appreciate it. And yeah, like I said, until the next time, thanks, and we'll catch up soon.
Hey, thanks so much, Paul. Thanks, Trevor. Thanks, everyone on the line here.
Okay, perfect. Thank you, and bye for now.